afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Kelvin Wong, market strategist at CMC Markets, is our guest today. Now, Kelvin, good afternoon.
Hey, good afternoon, Brian. Good to see you again.
Now, good to see you as well, Kelvin. Thanks for coming in. Now, we're going to take a look at how markets in the region are performing, but we'll start first with crypto markets. Bitcoin is at 19,441.6. It's down 2.82%. Ethereum is at 1,051.96. It's down 3.35%. Now, looking across to regional stock markets, the SGX is down 0.68%. Bursa Malaysia is down 0.6%, but the rest of the markets are in the green. Shanghai is at up 0.36%. The ASX or ordinaries is up 0.07%. The Nikkei is up 0.36%. The Hang Seng is up 0.66%. And rounding up the numbers, we've got the Kospi, which is up 0.67%. Now, Kelvin, what's your view on market performance in the first half of the day?
Overall, it seems to me is rather robust and rosy, especially you see the major Asia benchmark stock indices, like from the China related one, which is the Hang Seng Tech, and as well as the Nikkei and the Kospi. They are all in positive territory at this moment in time. So it seems to me that they're able to buck the negative trend that was actually seen in the overnight US stock market that was pretty negative. So it'll touch more on the S&P later on the technicals. But what's interesting over here is that the outlier at this moment in time is the Singapore benchmark STI, which is the very clearly is a stark underperformer, which is down close to 0.7%, I would say. So what's actually the driver that is driving this Singapore stock market STI underperformance at this moment in time is due to its three local banks, which is the DBS, OCBC, and UOB, because they form the biggest weightage in the STI, with DBS down close to negative 2% at this moment.
Now, what's causing that?
Not precisely. So one of the reasons we look at it over here is that because Singapore, we are actually a price taker instead of price setter. So if you look at the especially the US Treasury, we call it the yield curve. So in fact, the most famously or widely watched 210 yield has really started to actually invert with further downside projection as well. So that could actually give a bit of pressure on especially banks that has what you call it significant lending businesses like our local banks, which is we talk about the net interest margin that could be potentially be what I call it depressed going forward in a couple of months from now. And also on top of that, we also have this up and coming major US banks Q2 earnings. They're going to kickstart this week, which is out on Thursday and Friday. So that could give a bit of what I call a positioning adjustment in our local STI market, which actually we call it being hampered. Inflicted right now by the three heavy-weighted local banks, which is DBS, OCBC, and UOB.
And it's all sentiment driven, isn't it? Because essentially there is an expectation that the US banks will report poorer earnings.
Yes, precisely. So right now it seems that it's really been priced into the market at this moment in time because everybody is expecting this weaker guidance. But what we are interesting to see over here is that the more importantly, this forward guidance on how will these US banks will navigate in this kind of inverted yield curve environment. So do not forget over here is that some of the US banks, they do have other operation that could actually benefit from a much more volatile global financial markets, especially certain banks that has we call it a significant portion in their trading division as well, be it in fixed income or be it in we call it foreign exchange. So that could actually be pretty much interesting to see the guidance on this we call it non-lending business divisions of these big US banks.
Now, Kelvin, we've got a little bit of data and central bank action this morning.
Yes,
China's trade data was released and it showed a 13.2% increase in yuan denominated exports in the first half of 2022. Imports rose 4.8%. Now on the central bank side, Bank of Korea and Reserve Bank of New Zealand have raised interest rates by 50 basis points. Give us your take on what this means for us and for markets.
Yeah, because what we are seeing now for the China data, we are now waiting for the monthly June data, which is much more crucial, rather than the first half of the year data. The first of the year data definitely for January until June in terms of trade surplus, it seems to be pretty much robust because export numbers are still positive in terms of if we talk about a accumulated 6 months basis. But what's interesting for us right now is we want to see monthly data for June, which is supposed to be out at 11 a.m. Singapore time. But unfortunately, the
That's right,
data
which is
is
very
being delayed.
unusual that it's delayed.
Yeah, because till now, I think it's still not showing or it's still not flashing on my screen yet. Because why this data is much more important for market watchers, because do not forget over here is that in the month of May, where we start to see a much more the peak of these stringent COVID-19 lockdowns in key commerce hubs in China, like Shanghai. So we talk about it is that the lockdown starts to ease off in the early part of June, So it's pretty much interesting to see how the June data actually fared from an export and import perspective to have a gauge on number one, the external economy via China export, and most importantly, how resilient the China businesses and consumers are by gauging on their thirst for external, we call it goods and services, which is being reflected in their imports figure. So, but unfortunately, till then, we got to wait for the data until it's being flashed on the screen. Yeah, because it's still not showing. So right now, very quickly go on to the RBNZ, which is New Zealand Central Bank decision, which is a 50 basis point hike. So that is much pretty priced into the market for now. So definitely their guidance is continue to be pretty much hawkish at this moment in time. But however, if you look at the price section of the New Zealand dollar, it seems to us that it has really been priced, has more or less been priced in such expectation of this hawkish rhetoric that is being we call it communicated by RBNZ. So what you could see very interestingly over here is the New Zealand this let me flash the chart of the one second. Let me open up the chart because I think I just closed it. My apologies. Yeah. Yeah, I think let me very quickly if you have some time, let me very quickly call out the New Zealand dollar again. Let me do a very quick chart on the New Zealand dollar. Okay, so what we could see, this New Zealand dollar over here. Okay, so this is the current price action right now. So it's actually now resting at this key support level, which is 61 figure, which is actually the former congestion zone in April 2020 and May 2020, and a couple of fractal, we call it fractal extension feeble projection level. So if we screw into today's price action on the daily chart over here, so what we could see over here, very interestingly, is that this price action over here, instead of pushing much lower, markets has seems to be priced in this market has seems to be like looking ahead of this potential further hawkishness of RBNZ that actually keeping its current support on this New Zealand dollar at this 61 key support figure level. So the next intermediate resistance to watch will definitely at this 62.30 level on the New Zealand dollar.
Now, Kelvin, thank you very much for your insights and thank you very much for coming on the show.
My pleasure, Brian. Yeah.
We've been speaking to Kelvin Wong, market strategist at CMC Markets, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Thank you very much for tuning in.